Yeah.
This is over speculation. Expecting the market to keep going up and backfill what you've already supposedly bought.
Yeah, oh, yeah, that's, yeah. It's, in fact, I always tell people, for the equity side, like the bonds are just a bigger number, and that's why you're seeing it. But the same thing was happening on the equities. And I would tell people on the equities, they would say, I would try to explain to people how that there's a possibility that a broker, if you're dealing with a broker dealer, not so much in mutual funds because that's like repackaged, whatever. But just let's say that you're buying stock through Ameritrade or I don't know, E-Trade or one of these places, that you may not actually have shares in your account.
Somebody short sold and broker viewing your shares.
Yes, that's one way. The other way is that the trade failed to settle. That no one actually had the shares, and the system lets them keep building this up to the tune of the number only comes out once a year. I think the December, let's see, the 08 numbers are now 07. The 07 numbers came out at like $14 billion worth of shares were sold and not delivered at the end of December. It's a pretty big number. It's not a trillion, which is what makes the bonds much more exciting, but it's a big number. And people say, well, yeah, but I made money last year. I don't care. I made some money last year. It's all right. I had a 15% return on my portfolio, so it's all right. And I said, yeah, it's all right as long as the numbers are going up. I said, but if the stock prices start to come down, then you're gonna see it. And that's what's happening here. Is that in addition to all of the fails, right? People actually are selling stock, and now they're attempting to sell stock that doesn't exist because they've sold more than there was. For example, Fannie Mae and Freddie Mac. There are the institutions alone own 120% of the outstanding shares. And if you do any stock investing, you know what issued and outstanding means. That means the company issues so many, like a million shares, and that's all the shares there are. Institutions own 1,200,000 shares of Fannie Mae. How's that possible? How's that possible? Because there's problems with the accounting in the system, and the fact that there are people who say that the corruption, there's just an enormous level of corruption because you have this revolving door at the Securities and Exchange Commission who's supposed to be watching it. That they're on Wall Street, they're in Washington, they're on Wall Street. They're in Washington, they want to go back to Wall Street, so they let them do whatever they want. This thing, they're talking about slicing and dicing mortgages. That's not the problem. The fact that when they talk about slice and dice, so you take 10 mortgages, right, and you write 3 bonds. This bond is going to get the first payment that comes in, and they get AAA rating, right? And this bond is assigned all the defaults, so they get a higher interest rate up front, but they're most likely to have the losses instead of have a bad credit rating. And that's the whole slice and dice. It's not particularly complicated to describe in theory. The way that they actually did it, they just made so many mistakes in the actual processing, the paperwork associated with it. I mean, it's as if, there's not sufficient respect for people who are in the accounting profession, for example, because, a good accountant keeps you from getting into this kind of trouble. It's as if they just didn't let the accountants in the room. And they created these bonds and sold these mortgages however they wanted to without any real accounting, no real good record keeping. And that's a part of how they got into trouble.